Hi, everybody. Tom Gile. Hey, I'd be amiss if I wasn't talking about inflation in this week's report, given the inflation numbers for May. In this Gile report, we're going to take a look at the inflation, how it interacts with mortgage rates, and the impact on the local housing market. Also, stay tuned and see what the experts are saying, where we're headed, and get my take on the whole situation. So, jumping into inflation, the Consumer Price Index increased 1% in May. This is up from 0.3% in April. So, you can see May numbers jumped quite a bit. Taking a look at it, how inflation is measured over a 12-month period, that puts us at 8.6% for the last 12 months. So how does this all fit into interest rates, mortgage rates? Well, remember, the Fed uses the federal funds rate to try to cool the economy and tame inflation. They already announced that they're going to do another half-point increase in July. Now, there isn't a direct correlation between what the Fed does and what mortgage rates do. But remember also, mortgage rates tend to follow the 10-year T-bill rate. So we're going to take a look at this graph here. And really what happens is if the market is already adjusted for anticipation of what the Fed's going to do, there really won't be an increase in T-bill rates and corresponding mortgage rates. If something happens in the market and the market thinks that the Fed is not doing enough, that's where we're going to see some action. And you can see here on Friday, the T-bill, 10-year T-bill rate took a 10 basis point jump. So the market was reacting to what was going on, to these inflationary numbers. They were viewed negatively in the market, that the Fed wasn't getting inflation under control as much as the market would have liked to have seen. So as a result, mortgage rates and T-bill rates went up on Friday. So how does that all fit into what's going on in the economy and what's going on here in the housing market? Well, right now we're starting to see some shifts. We're in a transitioning market. I've been talking about this now for a while, and the market is continuing to transition, but it's been doing really what I expected to do so far. And this graph does a good job. We're taking a look at listings versus pending sales. You can see that listings for the prior 4 weeks, are down about 6.5%, so a little bit drop in listing activity. They're down about 8% for the year. But overall, I mean, listing activities remain fairly strong, and you can see that on this green line here. What is starting to cool a little bit are pending sales, and the white line shows that. And you can see, if you were to draw a line through the white line starting about April, it's pretty flat. Pending sales are down for the last 4 weeks, about 11% from where we were at the same time last year. So definitely seeing some transition here and a little less buyer pressure. Price trends, it's still a tight market. Inventory is still low, and pricing continues to increase here. So we can see the average price in Portland in the month of May was $649,600, and that continues to climb. Although, again, my expectations are that we're going to start seeing some leveling of this price as we move forward. And why are they climbing? Well, again, inventory. Inventory is still super low, although it did tick up to 1 month's worth of inventory in May. That's the highest it's been actually since about last October, but still below normal levels of inventory, which typically we see in the 2 to 3 months worth of inventory in the marketplace. So this low inventory is what's going to keep basically the heat on in this market that we're seeing right now as we transition. I'm going to break this out into some different local areas because we talk about Portland as a whole, but really it's made up of a bunch of small markets. And I love this table here because it does a good job explaining this. If we look at the metro area as a whole, we can see what the average price was, $649,600. That's up about 11% from a year ago. Inventory is at 1 year. You can see listing activity and sales activity are down slightly compared to last year. But take a look at some submarkets. And then one I really like to watch is Beaverton. Beaverton historically has been constrained by low inventory. We're actually starting to see it building a little bit of inventory in Beaverton. It's still low at 0.9 months, but listing activity has been exceeding sales, which is good news. We're building inventory in Beaverton. Two of the higher end markets in terms of price, Westland and Lake Oswego. You can see the average price in both those markets are over $1 million. They both are, in terms of velocity, starting to slow down. We're seeing quite a bit lower listing activity and sales activity compared to what we did in 2021. You can see that Lake Oswego's down about 16% on the listing side and 20% on the sales side, and Westland is very similar. Kind of switching gears a little bit, our home market of Tualatin actually is showing positive growth this year compared to 2021. Prices are up about 17%. We have more listings and more sales than we did last year. Looking at some of the other Portland markets, one of them that I've been keeping my eye on here for a number of months now is Northeast Portland. It seems to be a little bit of an outlier compared to what's going on in the market in general. Its numbers are up, but if you look at the price has only gone up about 3% in the last 12 months, which is definitely well below where we were at in these other areas where we're seeing anywhere from 10 to 30% price appreciation. So let's look ahead, and this is a mortgage rate projections that were put out in May, and you can see that a number of different sources here, Freddie Mac, Fannie Mae, NAR, are all projecting mortgages rates to be about the same rate, similar to what I was talking about, running anywhere from like 5 to 5.1% for the remainder of 2022, and hanging around those same rates here for the next couple of years. So the projection is that we're going to hit this plateau, and it's going to be kind of the new normal on mortgage rates. Existing home sales, I think this graph does a great job. I attended a seminar actually the end of last week, and we were going over this, and really the dotted line shows basically where the sales levels were at pre-pandemic, and we're really expected to go back to a level of sales pre-pandemic. You can see in 20 and 21 sales really spiked. The projections for 2022 are this is at a national level at 5.6 million homes being sold. Definitely down from 6.1 in 2021, but it's putting us more back into a more of a normal market, in line with where we're at in 2017, 2018, 2019. If you remember, those are all very strong years. We just had just kind of an absurdly high level of sales in 2020 and 2021. So what's my take on all this? I think we're going to continue to see inventory build, especially here in the Portland area, as more homes come on the market. And there's going to be a little bit of a softening of buyer activity due to the mortgage rates. But I think overall this is going to be healthy. This is something we need. I think the softening sales are going to be probably down about 10% from where we were at last year, but still a very strong year overall. And I'm not talking about sales price, I'm talking about sales volume. They're going to see a leveling of prices, more in that 3 to 5% appreciation as we wrap up, get in the second half of 2022 and into 2023. And I think we're going to see a stabilization of mortgage rates, especially in Q3 and Q4, as the economy starts kind of dealing with inflation, getting that under control. And I think we're going to be in that mid-5s range. So have questions about your home, maybe your market, economics, mortgage rates, you name it. We'd love to hear from you. Shoot us an email at askgilegroup@gilegroup.com. You can check us out on social media or give me a call. We'd love to hear from you.